Christine Lagarde signaled that the ECB debated a rate hike at length. The decision stayed on hold, but the debate shows policymakers are no longer treating sticky inflation as a background issue. Lagarde Speech Reveals is the hook because the confirmed event creates a specific pressure point. The supplied evidence says the ECB kept rates steady while discussing whether persistent core inflation and wage growth required another hike. The measurable anchor is 4% rate, and the story turns on rate debate rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The deposit rate is described at 4%, with analysts watching inflation, wage negotiations, and statement language for the next shift. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, ECB and euro rates sit inside a process where bond yields can change the readout. The baseline also defines the boundary. 4% rate is usable evidence, while anything beyond bond yields still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where Lagarde Speech Reveals becomes useful. Higher rates lift yields and support the euro, which can tighten financial conditions and reduce appetite for speculative assets. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is wage pressure, which is why 4% rate is a signal rather than decoration. That is why the segment spends time on wage pressure before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Borrowers, savers, European banks, and crypto traders are affected because policy uncertainty changes liquidity and risk pricing. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to euro rates and ECB, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. The timing of any hike is not confirmed, and weaker growth could keep the ECB cautious. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is fresh inflation data, wage negotiations, and whether the ECB statement turns more conditional. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need ECB or relevant market participants to show follow-through around bond yields, not only reaction around euro rates. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for Lagarde Speech Reveals is concrete. The next signal is fresh inflation data, wage negotiations, and whether the ECB statement turns more conditional. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect 4% rate to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to 4% rate, rate debate, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.